Right now, the biggest companies on Earth are making a $650 billion bet. But they aren't betting on software or apps. They're betting on raw, physical power. This is the largest infrastructure build-out in human history. We've spent years worrying about the chips. We worried about NVIDIA's supply chain and H100 lead times. But the bottleneck has shifted. The limit isn't silicon anymore. It's the plug in the wall. Welcome to the era of the gigawatt ceiling, a physical limit that could bring the entire AI revolution to a grinding halt. And the numbers involved are absolutely terrifying.
For decades, data centers were measured in megawatts. A large facility might use 20 or 50 megawatts of power. But the new AI clusters from Meta and Microsoft are operating on a completely different scale. We are now entering the age of the gigawatt-scale facility. To put that in perspective, 1 gigawatt is enough to power about 750,000 homes, and big tech wants dozens of them. This isn't just a slight increase in demand, it's a fundamental shift in how we think about computing. We are building the most power-hungry machines ever conceived by man.
Meta and Microsoft are leading the charge, with projected capital expenditures reaching hundreds of billions. Mark Zuckerberg recently noted that energy, not chips, is now the primary constraint for AI growth. They are scouting locations not based on where the talent is, but where the power is. If you have a gigawatt of stranded power, you are now the most important person in the room. But there's a problem. You can't just build a gigawatt power plant overnight. It takes years, sometimes decades, to get the permits and the infrastructure in place.
This is why the gigawatt ceiling is so dangerous. The software is moving at the speed of light, but the physical world is moving at the speed of concrete and copper. We are seeing a massive disconnect between the digital ambition of Silicon Valley and the physical reality of the power grid. One side wants AGI next year. The other side needs 10 years to upgrade a substation. If the grid can't keep up, the $650 billion investment might just become the world's most expensive collection of paperweights, and Wall Street is starting to notice.
The stakes couldn't be higher. We aren't just talking about faster chatbots. We're talking about the physical foundation of the next industrial revolution. But as the bills come due, the question is no longer, can we build it? It's, can we power it? And more importantly, will it ever pay off? To understand the panic, we have to look at what happened to Amazon, because their recent 10% dip was a warning shot for the entire industry.
Amazon recently saw its stock price tumble by 10% after an earnings report. It wasn't because they were losing money, they were making billions. It was because of how much they were spending. The market is starting to get cold feet. Investors are seeing record-breaking capital expenditure, or CapEx, and they're asking a simple question. Where is the return on investment? We are in a period of hyper-CapEx. Microsoft, Google, and Meta are spending at levels that would make a small nation blush. But the revenue from AI services isn't matching the curve yet.
The fear is that we're building a bridge to nowhere. If these companies spend $650 billion on data centers and power plants, they need to generate trillions in new value just to break even. This is the physical AI trap. Unlike software, which scales for free, physical infrastructure has massive ongoing costs. Electricity isn't getting cheaper, and the grid is already under strain. If the ROI doesn't show up soon, the capital markets might stop the party. But big tech can't stop. If they stop building, they lose the race to AGI.
Now, before we assume this is all a bubble, let's look at the other side. AI models are actually becoming significantly more efficient. We are learning to get more intelligence out of every watt consumed. Algorithmic breakthroughs mean that a model today might use 10 times less power than a model from 2 years ago to achieve the same result. The software is fighting back against the energy crisis. So while the total power demand is rising, the value we get per kilowatt is exploding. This is the efficiency paradox that could save the industry.
There's also a massive movement toward new energy sources. Microsoft recently signed a deal to resurrect a unit at the 3 Mile Island nuclear plant. They aren't just buying power, they're becoming power companies. Small modular reactors, or SMRs, are the new holy grail. The goal is to put a dedicated nuclear reactor right next to the data center, bypassing the public grid entirely. This would solve the gigawatt ceiling by creating private, high-density energy islands. But these technologies are still years away from being deployed at scale. The grid remains the ultimate bottleneck. In many parts of the world, the wait time to connect a new large-scale project to the power grid is now over 5 years. You can have the best chips and the best code, but if you can't get a permit for a substation, your AI project is dead in the water. The physical world is reasserting its dominance. And this brings us to the most important question. If energy is the limit, who wins the race? Because the answer will change the global balance of power. We are moving from digital AI to physical AI. In the digital world, more data was the key. In the physical world, more gigawatts is the key. This is a race for energy supremacy. The companies that secure the most stable, high-density power will be the ones that reach AGI first. It's no longer just a talent war, it's a utility war. This is why Sam Altman and others are investing heavily in fusion and advanced fission. They know the current grid cannot sustain the future they want to build. But there's a dark side to this energy hunger. As big tech gobbles up the available power, prices for ordinary consumers could skyrocket. We are competing with AI for our own electricity. In some regions, data centers already consume more than 20% of the total power supply. If that doubles or triples, the social and political backlash will be immense. We could see a future where AI zones have perfect power, while the rest of the country deals with brownouts and aging infrastructure. A digital divide powered by the grid. So, is the $650 billion investment a mistake? Not necessarily. If AI can help us discover better materials for batteries or more efficient ways to manage the grid, it might solve its own problem. We are in a race against time. Can the intelligence we create outpace the physical limits of the world we live in? That is the ultimate gamble of the 21st century. The winners won't just be the ones with the best models. They'll be the ones who controlled the fire, the ones who broke through the gigawatt ceiling.
Here is the reality. The AI revolution is no longer a software story. It is an industrial story. It's about steel, copper, concrete, and the most precious resource of all, energy. Wall Street might panic and stocks might dip, but the momentum is moving in one direction. The physical world is being rewired to support a new kind of mind. The question is no longer if AI will change the world. It's whether the world's power grid is strong enough to survive the change.
As we watch the $650 billion play out, keep your eyes on the power plants, not the press releases. The real progress is happening in the substations and the reactor cores. The gigawatt ceiling is the final boss of the AI revolution, and we're about to find out if we have enough power to defeat it. If we fail, it's a $650 billion lesson in the limits of physics. If we succeed, it's the beginning of a new civilization. The choice is in the wires.